time for LeaderOne Lending.
Welcome, everybody. Good to have you with us.
Welcome to LeaderOne Lending, a weekly mortgage market update providing up-to-the-minute information on interest rates, loan programs, and hot industry news, all related to the mortgage industry. Brought to you by Transformational Mortgage Solutions. To participate in today's program, our guest call-in line is 646-716-4972. Now here's your host of LeaderOne Lending, David Licken.
Let's begin.
Listeners, we're in for a real treat today. The focus of today's podcast is leading and leadership in challenging times. We certainly have some challenging times going on in this market. Mark Helms joining me, my co-host. Mark, good to have you here.
Glad to be here, David. Thank you.
Mark, you would agree these are some of the more challenging times we've seen in our 48 years, my 50 years in the industry.
Well, I think you and I've talked about this numerous times, but, everybody thought 2007, 8, and 9 were tough. This is a whole different kind of tough.
This is
yeah. And I think it's the toughest time we've had, David.
Yeah, I agree with you. And it's the contrast. So listeners, we're bringing on one of my clients. So full disclosure, this is a client and one that I really care about. And he is a leader. He is the chairman of the board of LeaderOne. His name is David Hopper. He's 53 years old. He's born and raised in Kansas City. He's married to his high school sweetheart. I love a romantic story. I got to hear that part of that story one of these days. He's got 3 daughters and 2 grandkids. I just joined him in the grandkid category. I sent him a t-shirt when he got one of his grandkids. I love this guy. He's a competitive golfer, a real athlete, a real veteran of the industry. But the thing that I like so much is how he's leading his organization. And folks, we can't hear enough from leaders. Now, I'm sure there's a lot of other leaders out there that are doing a great job. Love to hear from them. Love to get them on the podcast. But I listen to this man, and I listen to how he's leading his organization. So, David Hopper, welcome to the podcast, my friend.
Wow. Good morning. Yeah. Thanks for having me. Appreciate the invite and look forward to having a good little chat this morning.
Well, you've been LendersOne. First of all, I want our audience to get to know you just briefly, a little bit of your background, and then I want to get into the LendersOne model. Then I want to get into how we're leading. So let's start off with you, David. Tell us a little bit about yourself and your background. Were you born into mortgage lending, or how'd you find your way here?
Yeah, for sure. So, like you said, born and raised in Kansas City, and quick story on my wife, high school sweetheart. And she taught me one of my first life lessons. You want to talk about relates to the mortgage industry. I graduated high school and she broke up with me. She broke my heart. And one of the most painful times of my life, I still remember that pit in my stomach. But that biggest pain became my biggest gift in life. And we got back together 2 years later, and we've had a great life since. And it's one of those things that reminds me right there that at that time, it was the worst. And it was the best gift she ever did. So she's an angel and somebody that I cherish very much. So like you said, 3 daughters, 2 grandkids, and I was not born in the mortgage industry. I fell into it. I played tennis all my life, thought I was going to be a pro tennis player. I had long hair, and going
to be an Andre Agassi, huh?
Hey, back in the 80s. I played tennis at the real USC, University of South Carolina. That was before. That's what we like to say. So I'm a Gamecock. I lost my senior year in the NCAA championships. I cried, and my dad said, "You're gonna have to cut your hair and get a job, boy." And I said, "I've never worked. I've played tennis." So I got a job at Norwest Financial in the training program. Cut my teeth in the finance business, and here we are 31 years later, and it's been a crazy ride, but I wouldn't trade it for anything.
I think those roots, when you have roots in an excellent company like Norwest, which was a good company back in those days, and of course, so many things, acquisitions has evolved. I think I had a foundation at a bank when I started, and I'm so grateful for that foundation that's still in there making a difference. So tell us a little bit about LeaderOne, the model that you have. And I think it's a very unique model, not one that I have seen anywhere else in my 50 years in the mortgage industry. I think it's really something special.
Well, I mean, we like to think so too. So, long story short, LeaderOne was started in 1992 by A.W. Pickle here in Kansas City.
Good old A.W. We all love A.W.
Good friend. And then, he had the foresight and vision to, in 07 and 08, when all that happened, he had a vision of creating a platform where people could collaborate, they could have a seat at the table. And he sold 75% of his company to guys like myself and a lot of guys that are still here. And, the thought process, back then was he had a fanny ticket. He had a flat management structure. You could buy in, and, at that time, LeaderOne was doing 40 million a year, maybe. And the guys that got together, we wanted to have a say. We wanted to take all the things that we saw that was good in our career and take out all the things that we didn't like and try to put them at one place. And so it's evolved, obviously, through the valley of fire and death in this business.
That's a great way to put it.
We ended up buying AW out, and we fast forward to today, and we have nobody owns more than 12% of the company. The board of directors, the board of directors,
and it's originators, and it's the originators that bought the company, and it's not a bunch of mortgage bankers and the underwriters, funders, closers, secondary people. It was the originators that bought this, and I think that's one of the things I really want to zero in on. And then you wanted to have a seat at the table, and you brought the best elements from the other things, kicked out the other ones you didn't like, so you've had a chance to really bake your own, create your own recipe and bake your own pie. And I think that's
what I like to say is we bake the cake. So if we don't like it, it's our cake. We need to change it.
Your own stuff.
Yeah. So, with that, no private equity, no parent bank, no one or two guys run. It's not my company. Nobody owns more than 12%. And I don't think we were smart enough to know at the time, but when we look back, that's probably one of the strongest assets. Maybe our secret sauce is when nobody owns more than 12%, you're really focused on what's best for the company, the employees, and the customers, not what's best for David Hopper or somebody else. So, it's a model that I wouldn't trade for anything. It's something I love dearly. In times like this, these challenging times, I just keep pinching myself to think we will never have another opportunity like this in the mortgage banking, because we all know how tough it is to start a mortgage bank and to survive and do all this stuff. So just very grateful for where we are. And I think our model, you see the quotes out there, built by originators for originators. Well, we're living and breathing it every day. As the chairman of the company, but I also have a division myself with 100 employees. So wearing a lot of hats. We're having fun, but man, it's like you guys in a market like this, you definitely have to check yourself. It doesn't matter what model you're in.
Yeah, you're a division president, which means you're like it's like a region. You own a region. It's your oversight. You own it actually, and then you are also the chairman of the company, the whole entity, the legal entity. What kind of volume have you done? Give us a little idea. You went from 40 million all the way up to what's the high water mark that you've done? I know everyone's off of the high water mark, but you went from there to what?
Yeah. So, high water mark was 5 billion in 20. Obviously we knew we weren't a $5 billion company, right? The waters rose everybody. Today, gosh, we did 185 million in May. I think we're a $2 billion company. I mean, if you would have asked me 12 months ago, I thought we were 2.5 or 3 billion. So, ask me tomorrow. Might be different. So,
well, it's driven by market times, and you were talking about the high water mark. Well, it's like a rising tide. How high are we going to go? We're going to go as high as the tide can. And I think the key is to grab the market share. Mark, that's pretty impressive, Mark, as you start listening. Have you ever heard of a model, Mark, quite like this, Mark?
No, I hadn't. It's fascinating. I think the ownership structure is very unique. And from my leadership experience, I think that's a good play. And I think it's exactly what's making you as strong and as successful as you are, having everybody's buy-in. And that's no better way to do it than spread that ownership out.
Well, I'm also hearing you, as you talk about this, I'm thinking about the head of underwriting. I'm hearing the head of secondary. I'm hearing the chief financial officer, and I'm hearing those that are listening to this, and we have a lot of them that listen to this podcast are also going, wait a minute, mean my boss would be the guys that are producing the loans that are making my life miserable, sometimes making unreasonable demands? As that would be my boss? How's that working? You guys have, and I want to say right now, I've gone through the whole company from top to bottom, stem to stern. You guys have good quality loans. You're not the production folks. I mean, it's not the tail wagging the dog. There's a good partnership in there between what we refer to as executive leadership, those that run the mortgage bank, and those that are the producers. How have you been able to navigate that, especially in these kind of times?
Yeah. Hey, just back to marriage. It's like a marriage. It's a lot of work. It's not easy, right? It's give and take. It's all of that. But yeah, I think the smartest thing that we've done right is to protect ourselves from ourselves. I'm a sales guy at heart, competitive,
Protect ourselves from ourselves. That's a great statement.
So, with the executive team, we've got a fantastic executive team that's been just combined at LeaderOne 50 plus years. We're a full service mortgage bank. I like to say we're a Chevy or a GM. We're not a Range Rover, but we have it all, and it's built out from a CFO all the way through all of those C suites, and they really run the company day to day. And I think probably the biggest thing is everybody buys in to what we're trying to do. It's the collaboration, and the transparency and the open-mindedness. And that to me is something that probably works the best, is because most mortgage companies, or the ones I've been at in the past, again, I've been here 14 years. So is, hey, you know what? Be quiet, get in the corner and give me loans and give me more, right? Don't ask, don't tell. You don't ask why. And that's just different. We're thinking about, when you say you're open-minded, what does that mean? Well, it means you better be humble. You have to bring humility, and you have to check your ego, because myself or a CFO or a COO, that old school is, no, this is the way we do it, and we're really trying to challenge that at the status quo. So that's the thought process.
You're doing a great job on the leadership side. I love how you and I think we have these fun coaching calls that we do back and forth with each other. And I listen to how you talk and your attitude, and it really comes into how you lead, because there is divergent interests. You have the production people, you have the owners who are producers looking at a rate sheet, and then they're getting recruited because not everyone understands your model. So they're getting recruited and they're showing their rates, and it's all over the map. And we're seeing a lot of, again, the best word is divergent interests. And especially, when everyone's blowing and going, we've got more loans than we can. I mean, they're just falling out of the sky, running around with a basket, collect them up. There's not the time to really get in and start getting into conflict. But in these kind of times when things start contracting, we find out when the tide goes out where the rocks are, and that's where we find. But you have done a masterful job on that as you work through that. One of the areas we're talking about more and more about technology, and I'd love to get your thoughts on how you see technology playing out in the mortgage industry. Is this something that you guys see as the magic bullet, or how do you bring that in and look at that within LeaderOne?
Yeah, that's a really good question. First of all, I want to preface, I'm not a technology expert, but what we have failed in this in technology, and we invested. You want to look at mistakes? We invested in a concept, several millions of dollars, tried to create our own CRM, and we failed, right? So have a bad taste in my mouth from that. I as the chairman and as a division head, and I don't understand how technology in the market is the mortgage companies and technology. I'm not sure how we're all going to survive together. The way I look at, we need technology. And I think we have what I consider really good technology. But the one thing that I can't get through my head, and I'm a pretty simple guy, is the mortgage companies are the hunters and gatherers, right? We're out there, and every time I turn around, there's a technology company saying, I have to have this. Well, the pie's only so big, and it's getting smaller right now. And the one thing, and hopefully I don't offend anybody, what I'd like to see is a mid-size IMB. I need technology companies, if it's as great as they say it is, well, give it to me. Don't hammer me up front. If I'm going to get an ROI on it, let's share in the upside. because when you start looking at all the costs and everything we have to go through to run a mortgage bank, it doesn't matter. The math doesn't work. I don't see it. So, and if there's going to be less IMBs, and how are all these fintech companies going to survive? So I don't understand. I get it, but I don't understand when we look at our technology costs, they're through the roof over the last 5 to 6 years.
Especially the LOS component of it. It is just absolutely beneficial. And it's death by 1,000 cuts, but it's not these little paper cuts anymore. It's like major knife wounds. You brought up something when I was at the Total Expert Conference last week. You texted me with a concept. It's basically, let's go to a performance model, and I raised that up with Total Expert. I raised it up with several people there. There's companies already starting to do that. David Savage of Total Expert says, Dave, that's how we do it. We don't get paid unless our clients are successful. We have gone to a performance-based model. I think that's something that anyone who's listening to this with technology or any more independent mortgage bankers should be paying attention to that, because if you want your technology to be adopted, we've got to get on the same side and alignment on that. So I love that. I love that concept. To what degree that can happen, we shall see, but I'm glad you put that out there.
Yeah, I appreciate you, saying that at the conference, because I think as mortgage bankers, right, if we stick together, if we can get together and find the tech companies that want to help me grow it. If my baseline's 2 billion and they come in and we grow to X, Y, and Y, then they should share in that. Don't give me I don't need to lock in on a 2 or 3 year contract. If your stuff is so great, just give it to me and it doesn't matter. So it has to be rethought, I believe, and hopefully, we can bridge that gap somehow with these technology companies. And I know we are right now. We're going back to all of them. We're like, hey, you got to help us out here. We got to bridge the gap. I mean, in the tough times, let's work together. Let's win in the good times. So it's going to take all of us together.
David, dealt with technology my whole life, and I enjoy hearing what people are doing with technology in their shops. And what I keep hearing out there is most people feel like technology now is death by 1,000 cuts. It's exactly what you're talking about. Everybody's got something new they want you to try, and they want you to implement it, et cetera. And I really like your concept of sharing in the upside is to get people to come together. And I'm glad to hear from David that people are looking at that right now. But along that line, do you think we've created our own nightmare inside the industry? Do you think there's and I'm not saying there's way too many technology companies as much as I'm saying there's way too many technology companies that aren't that good, that are clouding the waters, so to speak. What's your take on that as you look at technology for your business?
Yeah, and it's a good question. I have 2 takes. The first one is just on the technology. Yeah, I turn around and there's a shiny object. Just someone brings you a shiny object. And in our model, we look at it, right? We embrace the possibility. Wait a minute. A partner called me or a division head, like, okay, let's look at it. So you start looking at it and you start adding up and you're like, man, there's no way we can do all this. We got to figure out the ones that are going to win, because we know some of these tech companies aren't going to make it. They're going to get absorbed. So that is super tough to figure out. So, and then the second part of that is the other side. I don't know if it's not necessarily technology, but when you look at the cost of credit and verification of employment, IMBs are getting annihilated right now, just by the added cost of everybody raising their price. So it's a 2-prong approach that we're trying to figure out this very minute.
See what you're talking about for sure. Okay. Well, I'm going to move on to our next question that we had, which I think is a really good one. We know we got price compression is a real thing that happens every day, but we want you to be the predictor of the future here for us. When do you think the spreads are going to come back to normal? And are we just playing with ourselves if we think that they're going to come back to normal anytime soon? And we'd love your opinion on that, because your feet's on the ground. You're having to deal with this every day in a real life situation.
Yeah. Wow. I'm not that smart, but
me neither.
So right before this call, I got an email of a competitor price, and so I'm living it right before this conversation. So it is so real right now, and I can't figure heads or tails how we all know the mortgage pie is only so big, right? The bigger guys might make a little bit more and vice versa. But I've seen we know what our price is. We're transparent with our people. Here's raw price. Here's what it is. And seen some really big swings. So here's my thought process just on my prediction. And this is just the David Hopper is I'm preparing for it not to come back. My kindergarten knowledge of throughout the years is whether, you go to 1999 and gain on sale and you go through the 07 and 08, the only thing I've ever seen is the price. It stays. It doesn't come back. So I hope I'm really wrong. So we're planning for price compression to stay for a long time. But as I look out, what we're talking about from an executive level and a board level is we're thinking second quarter of next year that maybe we get a little bit of a bounce back. So we're preparing for the next 9 months for the fight of our lives. And right now, even today, when business is better, we're going to make money in the second quarter, hallelujah, and all this good stuff. We are dotting I's and crossing T's right now. So I hope I'm wrong. It's earlier than the second quarter, but that's kind of what we're kind of earmarking.
Yeah. Well, I think you're focusing the right way. I mean, adjusting to the new norms whenever they are and how long they're going to be is what makes us all successful in any kind of business we do. And I think you're taking a realistic approach, which is a excellent way to be, because if you can make money in these tough markets, when it does come back, you're going to have a kind of windfall. And I really salute you for what you're doing on that. Moving on to another question. When you look at the independent mortgage bankers that are out there, the cost to produce, and you've already addressed this earlier in the conversation, talking about everybody just nailing you out there with the cost from credit reports to employment verification to God knows what that you're ordering. And I know those folks' business has fallen off and they got to get a price break on it somewhere, but at the same time, they can't take it all out on you guys because that just strips into any profit you're making at all. With that in mind, we've had the compression we talked about, but what can you do? What did you do? What can you think about doing? And what is Leader doing today about the cost aspect of your business? And you've already covered, talking to the technology sides and trying to rearrange the structure you have with them, but your other costs, what are you doing to try to drive your costs down?
Yeah, great question. We've been working on it. Yeah, I mean, since 12 months now. We've tried to get out of the lease business first and foremost. We're not taking down large leases. So we're pretty much out of the lease market. When we look back 12 months, we have whittled everything down, and honestly, we won't do a lease any greater than 2 years, and that takes a higher approval just because of that. So I feel like we've made great strides there. We have really gotten efficient in our sales. Our sales professionals and the operations. So, you look back 3 or 4 years ago and, maybe you hear people say, well, whether it's every 4 loans or 5 loans, you can have a production officer or assistant. And we've really tried to take that up to 6, 7, 8, and 9 and really get lean and try to find where you can't have, the LP1, LP2, LP3 and do 10 loans. It doesn't work. So, I think that's definitely something we've made great inroads. Marketing, you have to market. We're a referral-based lender. We're really not in the consumer direct, but really looking at where you're spending your marketing dollars. That got out of control. We wanted to co-market here and co-market there, really trying to get ROI and trying to measure that is something. And then overall, we're trying to, when we started, bought into LeaderOne, we wanted to have a competitive price, but it wasn't, we wanted to have the best price. We never tried to do that. And really educating and coaching our people to hold the line on our price. Because if we have no value proposition, then we are going to have to yield to price. But if we have a value prop and we can educate and help the consumer and the realtors and our referral partners, then we feel good about being maybe an 1/8 higher or a 1/4 higher because we're giving value. So that's been our approach. We're working at it every day and still have a lot of work to do.
I like what you're doing and your attitude about the margins. If you have to be the lowest price in the market, do you really need a sales force? Because you can just publish a rate sheet and that's consumer direct. Go out, lower costs, lower everything. But if we want to go selling, so much of this business is a relationship business, David. I look at how you and your division, I want to talk about that. I want to talk about Elliot Lewis and Shane Moe and Alan Price, all these guys that are part of the ownership structure of this company. They're out recruiting, and they're going out and talking about the value of this, of the structure, that it comes back. They believe in this structure that is so unique to LeaderOne. How are you finding recruiting? What are you finding that works?
Yeah, I mean, it's definitely it's a tough market out there, right? First of all, we're re-recruiting our people that we have.
Re-recruiting, that's good. Yeah.
When we look across LeaderOne, I'm a LinkedIn guy. If you're on LinkedIn, there's a lot of people who've been here 6, 8, 10 years, and those people are the fabric of LeaderOne. So we want to make sure we have those people here, because that's who got us here. And then we've been very fortunate in an unfortunate market. And you hear the saying, make lemonade out of lemons, right? And we were very grateful. There's been a couple companies that went down, and we were able to take on some new divisions. And so we were fortunate on someone else's unfortunate situation. So, we were, call it lucky, right? So, but the model allowed us to do that because it's that seat at the table model. So I think in the last 12 months, we've brought in 4 new divisions, which is
not branches, divisions, whole divisions.
Yeah.
Wow.
Yeah. So when you look at the 10 years prior, we maybe brought in 2 or 3. So we've been very fortunate in that. And when you have a flat line management structure, corporate, we're trying to run it at X, and we don't need to make a bunch of money. Hey, we need to be profitable. We need to build the balance sheet, but we answer to ourselves. So in times like this, we can go, okay, well, corporate doesn't need to make 20 bips or 15 bips. We can make 10. And we can help the divisions and the branches and the LOs. And when times are good, so we're doing that. We're working on that. So, but recruiting as a whole right now, we're being cautiously optimistic, and we have a great pipeline, but like I said earlier, we don't know who we are. It's tough to know what people are right now, and they're great people out there. So we're just trying to get it right. We're not a company that can't give $2 million sign-on bonuses, but we're playing the long game. And if we can find those people that want to be a part of something where the sum is greater than the parts, I think that's our value proposition, where I believe, and as a board, in a meritocracy, right? And
explain the term meritocracy. Some people might not understand what you mean by that.
I'm a big Ray Dalio fan, and a meritocracy is the holding of power by leaders is on the basis of ability, not because I own 12%, not because my son-in-law works here. It's everyone's views are valued, right? And it promotes fairness and equality, that open-mindedness that maybe doesn't exist in other companies. I know there's a lot of companies that I follow on LinkedIn. I have a lot of, I'm like, wow, that's really cool. But there's a lot of companies that don't have that. And that's something is our value proposition, whether it's you're an LO that has a great idea or a division head, we're embracing the possibility that you might know something that we don't.
Yeah. One of the division managers, it's Elliot's wife, when you were all together in the Cayman Islands for your President's Club, basically what many people refer to as their President's Club, you gave a speech there, David, and I want to end the podcast touching on some of the elements you talked about in that speech. Suzanne, Elliot's wife, walked up to you and says, and she's a leader, a marketplace leader in her respective industry, which is healthcare. And she says it was one of the best speeches she's heard by any CEO or chairman give. What are some of the themes that you hit on there? And what did you tell your people in these challenging times?
Well, I don't think it was that great, but I definitely appreciate her giving me the kudos. But, I think the one thing that I try to do in LeaderOne is we just try to keep it real. I don't have all of the answers, but together we can find the answers. And I think that really through and through is LeaderOne. we're humble enough to know that we don't have all the answers. So, you know, when I spoke to the leaders and the top people in Grand Cayman, it really came from that essence of who we are. Is it takes all of us, and we didn't get here because of David Hopper. We didn't get here because of Adam Schwartz, or it took all of us together. And I really like to focus on, you know, the sum is greater than the parts. You've heard me already say it, and that's something. The people matter, and you can't have an army, you can't have a team with a bunch of alpha A people. It takes everybody. It takes the C's and the D's and the A's, and it takes people who are maybe average, but they're great people and they're loyal. And that is who we are in essence, and something that I'm very proud of that we keep working on. And then, you know, one of the things that I ended with there is I'm a big Wayne Dyer fan. If there's one thing in my life, I wish I could have met him. He's no longer with us, but it's be open to everything and attached to nothing.
Yeah.
And that right there in this market, and that doesn't mean like, oh, well, we don't care about our people. It goes, no, like what got us here might not get us through the next 5 years.
That's what not to be attached to.
Yeah, we're just siloed into, oh, well, that's how we got it. No, man, let's be open to everything and let's look at it and let's crack the egg. And then the other thing that I ended with is, in markets like this, there's a couple things. We don't want to change, right? I don't want to change. You know, David, I told you I'm doing this podcast. You're getting me out of my comfort zone. You know,
I appreciate that.
But when you change the way you look at things, the things you look at change, and that's this market, and that's what I challenged, you know, our people to. We have to evolve. We have to grow and become better. And then, lastly, I'll say this is, you know, the Navy SEALs have a saying, you know, embrace the suck. And
embrace
that's what we have
suck.
to do in this market.
That's right.
We have to get the full benefit out of this adversity, and we have to become better and stronger, and we have to evolve. And we're not throwing in the towel. We're playing the long game. We're here. We have the balance sheet. We saved the money. We did the hard work, and we're looking forward to you know, fighting through it.
Yeah, you got an amazing balance sheet, and you've grown so amazingly. Alan Price, in my conversation, Alan, another one of the division presidents, one of the top guys that produces well out in the Pacific Northwest, great guy. He says, Dave, the thing that I love most about this place, we can scrap like we're like brothers inside of a family, but man, it's a family. We're together, and we're so much better together, even though we may scrap once in a while. I love that attitude. And it's your leadership that's brought so much of that. It's the commitment of Alan and Shane and Elliot, and I could go on and on and on, and all the division heads. Those are the ones I happen to work with, interact the most. But your leadership is just exemplary, David, and I applaud that. And I applaud the openness. You know, the part that you do hold on to the people, but you don't hold on to what necessarily was the old thing that got us to where we're at. That's where we need to be willing to look at new concepts and new ways of going about it. Mark, any final thoughts as we wrap this up?
Yeah, one, David, David, as you were talking about your divisions, and I'm assuming some of those divisions or most of those divisions can be doing the same thing as another division. Okay. And no two divisions are going to do things exactly the same. Has that been an iterative process for you? Has it been a learning process as you picked up good things that have been by one division or poor things that have been done by division that can be improved? Has that been valuable to you?
Yeah, that's a great one. I mean, as LeaderOne, if you want to talk maybe about over the years, maybe a weakness is right. We're very entrepreneurial. We love autonomy. We're risk takers. The divisions were risk takers. So as we've evolved, you know, you go back 8 years ago, like divisions were like, no, this is my division. We'll just do it, you know, plug and play. And what we've learned in this market, when starting in COVID to now, is we have to collaborate better. And that there's so much good stuff happening. And when I look back, right, we made a mistake, right? We should have done this earlier, but we've learned from it. So, you know, we have division calls, and we're absolutely internally focused on creating an internal coaching we brought in Onto Mortgage into LeaderOne last year, Rick Shear and Rich Clayton, and they're just really big into this, and we're learning so much from them that it's just been really a breath of fresh air. So they are really pushing that. Tony and Joe Gabrione are pushing it. So it's an area that we have to get better in, but we've identified it, and we're collaborating as we speak to spread that throughout the company. So yeah.
That was good. Rich and Rick were a previous client of mine, and they were looking at doing something, and I'm the one that had the privilege of introducing him to you. And I love how you embraced their strengths, brought them in, and how they're now embracing the strengths, other aspects of what you're doing there. This is outstanding.
Well, David, I think we ought to form a division and go join them.
I think they've got a great model. They really do. Appreciate it.
We need all the brain power we can get. So come on.
Yeah. Well, Mark and himself is a good originator. I was in those days. David, thank you so much for joining me here. I know how busy you are. You got an upcoming board meeting, and I really appreciate the opportunity to work with you as a client, but more importantly, you coming on and willingness to get out of your comfort zone and share with our listening audience, because I love your leadership style. You're doing a great job in these difficult times. Thank you for being here, sir.
Yeah, well, Mark and David, thank you for having me. And, for the listeners, LeaderOne had never had anybody come in and look under the hood. And, we hired David in Transformational Mortgage Solutions a year and a half ago, and it's been a great learning exercise, and gotten to know you, David, and consider you a friend and that's probably something that the relationship has been really good for LeaderOne and the executive team. So I definitely want to give you and your team kudos. So it's been a real joy, and it's something that when I look back and I really haven't had a coach or a mentor or consultant over the years, and it's been great 18 months. So I appreciate you there.
Oh, thank you so much. I appreciate it. Thanks for taking time here to be with us today, man. Appreciate it. Thanks you, Mark, for joining.
Thank you, David.
All right, we'll see you guys. Thank you.
You've been listening to Lykken on Lending, a weekly mortgage market update with your host, David Lykken of Transformational Mortgage Solutions. Join us next week, and thanks for listening.